Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now is an important moment for both Bitcoin and Ethereum. Also, tomorrow we have new inflation numbers being released, and in just a couple days is, of course, the Ethereum merge, which I'll talk more about later in the video. So make sure you watch to the end. First of all, just giving you a quick update on the daily Bitcoin chart, and obviously we are still looking more bullish than bearish on this chart because obviously we still have this active bullish divergence playing out, as I've been talking about ever since this point right down here. And then just after confirming this bullish divergence on the daily Bitcoin chart, we of course saw that bullish cross in the daily Bitcoin MACD, which gave us more bullish confluence. And over the last one day, we have seen a breakout above that short-term level of resistance just here, which I'll talk more about in just a moment. But first, zooming out to the 3-day Bitcoin chart, and obviously we still have this massive 3-day bullish divergence right here. And in case there's anyone new to this channel, this is the first bullish divergence on the 3-day Bitcoin chart that we've seen since the middle of 2021. So obviously this is quite a significant pattern to pay attention to. And looking at the 3-day Bitcoin RSI, right now we are potentially seeing a breakout above this massive descending line of resistance that has been holding down the 3-day Bitcoin RSI ever since early 2021. And so it would be a big deal. It would be a very bullish signal if we do end up confirming this breakout in the 3-day Bitcoin RSI. And by the way, to confirm that breakout, we need to see at least one 3-daily candle close with the RSI above this line of resistance, which by the way, this line of resistance in the 3-day RSI is sitting at around 46 to 47. And as of right now, the 3-day Bitcoin RSI is currently sitting at just above 48, with the next 3-daily candle close coming into play in around 15 hours from now. And so as always, I'll keep you updated on this chart in these videos and also in real time over on my Twitter. So if you haven't yet followed me over there, make sure you're doing that. The link is down below in the description and in the pinned comment. But anyway, taking a look at the shorter term, zooming into the 4-hour Bitcoin chart, right now we have seen one 4-hour candle close above the 50% retracement level, which was of course a short-term level of resistance that I've been mentioning over the last few days. And that level of resistance, by the way, is sitting at around 21.8k approximately. So the fact that we've seen one 4-hour candle close above that level, obviously that is a short-term bullish signal. But obviously that was not the only resistance level that we need to pay attention to. For example, we have this golden pocket, which is actually the most important Fibonacci level, and that is coming into play in between around 20.7k to 20.8k. And so based on that important Fibonacci level, we should be expecting some more resistance as the Bitcoin price potentially moves closer towards 23,000, which means it's possible for the price of Bitcoin to play out a rejection from that level of resistance, especially while the 4-hour Bitcoin RSI is still well into overbought territories, which is telling us that we do to see a bit more of a cool off, even though over the last few days we have seen reduced bullish momentum as I've been talking about. But despite that being the case, we haven't really seen enough of a cool off to help reset the RSI. So right now, technically speaking, we are still overheated on the smaller timeframes like the 4-hour chart. But if the price of Bitcoin does end up breaking above the golden pocket, and basically if we can hold above 23,000, then in that potential scenario, I'll be looking towards 25,000, the local high, as the next significant level of resistance. And if the price of Bitcoin confirms a break above that local high at just above 25k once again, then that would be an extremely bullish signal. But obviously that hasn't happened as of right now. But anyway, just tomorrow, there's a significant event taking place that could heavily affect market prices, such as the price of Bitcoin. And that event that I'm talking about is, of course, the release of new CPI data, which will update the official inflation rate in the US. And by the way, in case you didn't already know, the official CPI inflation rate in the US right now is sitting at 8.5% year over year. And these new inflation numbers will be released at exactly 12:30 p.m. GMT time on the 13th of September. And as soon as the new inflation numbers get released tomorrow in real time, I will tweet them out over on my Twitter. So once again, follow me over there if you want to stay up to date in real time. But now talking about what we should be expecting and how markets could react in different scenarios. So first of all, what the majority is expecting right now based on consensus and the trading economics forecast is for inflation to come in at 8.1% 1% with tomorrow's CPI numbers. And if that's the case, then of course that would represent a drop in year-over-year inflation by 1 full percentage point since the 9.1% high, which basically means if the current federal funds rate, which as of right now is sitting at 2.5%, if that's already having an effect on inflation by dropping inflation down 1% every 2 months, then that sends a signal to the Fed telling them that they might not need to raise rates too much further than what they already have done. And in fact, if the Federal Reserve keeps hiking rates as they're expected to do for pretty much the remainder of this year, then once we're at those higher interest rates, that would simply accelerate the decline in inflation. And with these forecasts telling us that we should be at around 8.1% year over year with tomorrow's CPI data, once again, that tells us that the current trajectory for inflation is dropping by 1% every 2 months. And so for inflation to return to what's considered somewhat normal, which is 2 to 3% year over year, based on a drop of 1% in the year over year inflation rate happening every 2 months, that would of course mean around 10 to 12 months until inflation gets down towards 2 to 3% back to normal. But considering the fact that the Federal Reserve still has more rate hikes planned that are currently priced into the futures markets, those future rate hikes, like I just said earlier, would potentially accelerate the decline in inflation, which means it could be much shorter than 10 to 12 months before inflation actually gets back to normal towards 2 to 3%. And now when you're talking about what numbers tomorrow would be considered bullish and what numbers would be considered bearish, basically if the year-over-year inflation rate comes in underneath expectations, so if it's lower than 8.1%, that would be a bullish signal. But on the flip side, if inflation actually comes in higher than what we expect, if it comes in higher than 8.1% year over year, then that would be a bearish signal telling us that actually the Fed hasn't really gotten that much control over inflation yet, and they still need to do a lot more work with raising interest rates and more quantitative tightening, which is bearish for markets. So basically, if we get the expected 8.1% year over year inflation rate tomorrow, then I would expect a slight bullish move across markets. That would be a short-term bullish signal. And if we get lower than 8.1%, I would expect a pump across markets. So a pump in the price of Bitcoin, for example. But we could end up seeing a crash in the stock market or a crash in crypto if the numbers come in higher than 8.1%. And just a quick reminder, make sure you're subscribed to this channel with notifications turned on so that you do not miss out on tomorrow's update video, which will be important. And now, just before jumping into the Ethereum charts, quickly talking about the Ethereum merge, which is set to happen in less than 3 days from now. And the Ethereum merge, in case you don't already know, is one of the most significant events to happen in crypto history. And there's a lot of fine details when talking about the Ethereum merge, but really the main thing that's happening is the Ethereum proof of work chain is merging with the Ethereum proof of stake chain, which basically means the consensus layer of the main Ethereum blockchain will move from proof of work to proof of stake, which means in order to validate transactions on the Ethereum blockchain post-merge, you will need to own a stake of ETH rather than run a bunch of Ethereum mining hardware. And basically, if the merge happens successfully with no errors, then this is an extremely bullish upgrade to Ethereum long term. But of course, there is the possible risk of an error happening with the Ethereum merge, which is something to consider. And as we move closer to the merge, I'll cover it more and more on this channel, and of course in real time over my Twitter as well. But anyway, getting into the Ethereum charts today, this right here is the daily Ethereum chart, and right now the price of Ethereum is still continuing with this breakout to the upside from that bullish falling wedge pattern, and the first technical price target for that pattern is sitting at around 1830 to 1840. But between now and then, there is an important Fibonacci level of resistance, which is of course the golden pocket sitting at around 1.8k. And so as I mentioned yesterday, that is an important level of resistance in the short term to pay attention to, because the golden pocket is the Fibonacci level where we most commonly see reversals. But of course, if we do end up seeing a strong breakout above around 1820 to 1830, then in that case, the next most significant level of resistance for Ethereum would be sitting at that local high at around $2,000 per ETH. And as I've been talking about over the last 1 to 2 days, obviously we've seen a slight short-term cool-off as expected for Ethereum, which is helping to reset the 4-hour Ethereum RSI back down towards neutral levels. And that is actually a sign of a healthy trend, because what we don't want to see is the RSI just spike to the upside and then come back down rapidly with a quick pump and dump. That is, of course, not a healthy sign of an uptrend. So for now, with the price action running into some short-term resistance, while the MACD BTC is still showing a lack in short-term bullish momentum, we're still currently within that short-term call-off, which is basically a pause within the uptrend. But in terms of the trend, I am still more bullish than bearish. And once again, as I've been talking about over the last couple of days, Ethereum is potentially forming this massive cup and handle pattern on the daily time frame, with the breakout line sitting at around $2,000. So we need to actually see the price of Ethereum pump up towards 2,000 and then see a breakout above 2,000 in order to actually confirm this pattern. So as of right now, this is one to watch, but right now it's not actually confirmed. And if you want to maximize the profits in crypto, no matter if the price is going up, down, or just chopping around sideways, either way, you can make money in crypto by watching these videos popping up right here on your screen. The video in the top left of your screen, it shows you how to make money if the price is going either up or down, and the video in the bottom left of your screen shows you how to make money if the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.